for those of you who aren't too familiar with BNP Paribas, we are one of the top 10 largest banks in the world. We're the largest bank in the Eurozone. We have about 200,000 staff across all types of finance in 71 markets. If we look just at Asia, we have about 20,000 employees across 14 markets, including, of course, Taiwan. So Asia is a very important part of our business globally. As a bank, sustainability is a core part of our DNA. Recently, we joined the new Net Zero Banking Alliance, where we committed that our lending and investment portfolio will be net zero by 2050. This is the one led by Mark Carney, the former governor of the Bank of England. And recently, in order to help our clients also transition, we've set up a low carbon transition group, which is 200 staff globally to help our clients transition to a low carbon economy. And that's the bank overall. I actually sit inside our wealth management business, and I'm the head of investments for our wealth management business in Asia, where this is where we advise and manage money for private clients around the world. On the wealth management side, we're also a top 10 wealth manager globally. In Asia, we're also a top 10 with about $100 billion of client assets in Asia. On the wealth management side, SRI has become very important over recent years. We started SRI in the early 2000s in Europe. In Asia, we've really gotten the ball rolling over the past 4 years. And what I would say is that there's been a very sharp increase in client interest in sustainable investing over the past 2 years, especially. I've been here in Asia for almost 10 years. And for the first several years, very few clients actually asked about how we integrate ESG or what our sustainable investment solutions are or were. But we've seen a massive sea change in the past 2 or 3 years, and clients are increasingly proactively asking their RMs, their relationship managers, how we as a bank look at sustainable investing. So what I'm going to do, linking back to what Joe mentioned earlier about ABC, avoid harm capital, benefit stakeholder capital, and contributor solutions capital, I'm going to do one slide on each. Perhaps if we can move on to the next slide. This is really avoid harm capital. Within investments, this is, of course, negative screening or various negative screening policies. But this applies not just to wealth management. This applies to our entire banking group. So on the far right, we have no investments in unconventional oil or gas industry or tobacco industry. These are excluded. They're also excluded for us to recommend to our clients or for our asset management divisions to invest in. So they're totally excluded. And on the left-hand side, we have very clear financing policies on a range of other industries which have clear ESG challenges and are very sensitive sectors. These policies that we have are public. They're free for anyone to read. And it's very important for us that we move and help our clients move in the right direction. For example, for coal-fired power generation, which you see at the bottom left, we haven't financed any new facilities for the last few years. And we've committed and are working with our clients to phase out all financing in OECD countries by 2030 and by 2040 for non-OECD. And the key here is at the same time, we're massively ramping up the financing of renewable energy, because we have to help our clients who are the producers of energy to move from traditional fossil fuels and to transition to renewable energy. So these are very important areas for us. But this is just the exclusion. This is more of the avoid harm capital. If we move on to the next slide, slide 4, we can look at what I would say is the benefit stakeholder capital, or if you look at it from an investment perspective, and now this is really the methodology you see here, the global rating is just used within BNP Paribas Wealth Management. And the top of the slide says decoding a complex world. I think this is very important. It's very easy for clients who are not experts to get confused. What does ESG stand for? Okay, that's easy. Environment, social, governance. What does SRI stand for? When I started SRI investing in 2006, it stood for socially responsible investing. It doesn't stand for that anymore. Now it stands for sustainable and responsible investing. So even these short abbreviations, their name changes. And there's a lot of other complexity around this. And we all know, those of us in the space, that when it comes to rating methodologies, how do you rate a company which issues equity or bonds, or how do you rate a mutual fund to determine its level of sustainability? There are no common standards. There's a very diverse range of ways that you can rate companies, and depending on whether you're more focused on environmental, social, or governance factors, you may lead to very different results, depending on whether you are sector agnostic or whether you rate within sectors. If you rate within sectors, within the energy sector, some fossil fuel companies will get high ratings because they are moving towards renewable energy. But if you rate across sectors, you might see fewer companies with the fossil fuels because, of course, compared to other companies, they are polluting more. So it depends very much on your methodology. What's very important for us is that we have a simple methodology that we can explain to our clients. This is the Clover rating, which we use across stocks, bonds, mutual funds, so that there's something common for clients to understand. Once the instrument is rated, it'll be rated from 0 to 10 Clovers. 0 is very poor integration of sustainability concerns. 1 to 4 is beginning to do ESG integration. 5 to 10 is sustainable and responsible investing. And within that, 9 and 10 are what we would call impact investing. And obviously, as Cliff mentioned, impact investing, you have to state the impact upfront. It has to be measurable, and there has to be a clear intention to that. We have some clients who want to dig into this in a massive amount of detail. Some of our sophisticated family office clients are leaders in investing in this space. There we dig into individual stocks. We look through why the score is as it is, and they can debate us, and we generate a lot of value in that way. The majority of clients are at the start of their ESG integration journey, and for them, we have to ensure that it's not too complicated. Otherwise, they get turned off very, very quickly. We've seen it again and again. The immediate assumption is, if I have to do this, I'm going to lose financial returns, and the conversation kind of ends there. So you have to create a very simple series of conversations to engage most of our clients. It may be that those of you attending this forum, you're already engaged in this area, but you're a small subset of what would be representative of our overall client base in Asia for us or any other private bank. If you look at the instruments that we rate, 3 years ago, only 20% of the instruments of in our Asian portfolio had an ESG rating. Now 70% of our assets are rated. Rating takes time, it takes effort. This isn't something where you just sign up to a service provider and suddenly get a rating of all your instruments. We work very closely with BNP Paribas Asset Management, our sister company, which has a sustainability center with more than 20 full-time analysts just performing ESG analysis on a broad universe of equity and bond issuers. So that's where and this full-time team, they're responsible for helping us drive this increase in the ratings penetration of our stock and bond universe. Once again, education is very important here. And although underneath it, there's an enormous amount of complexity, which can be debated with clients, to get most clients engaged at a first step, you have to keep it simple. And this is one of the key messages that has become clear to us as we try to engage clients over the years. If we move on to the next slide, we now move on to contribute to solutions capital, which I would see as impact investing. And this is an example of an actual impact investment where BNP Paribas was involved at a number of different stages. So this is the Indonesia Tropical Landscape Financing Facility. Some of you may be aware of it. The particular project here was one where BNP Paribas acted as the agent and arranger, and it was a joint venture between Michelin, the French tire manufacturer, and Barito Pacific Group, rubber plantation in Indonesia. TLFF is designed to provide long-term financing, primarily for rural smallholders and renewable energy projects in Indonesia. This particular one was a $95 million sustainability bond to finance a sustainable natural rubber plantation on heavily degraded land. And of course, that rubber was going to be used by Michelin for its tire manufacturers. What's important and what really does make this an impact investment is that upfront, the social and environment objectives and the safeguards were very clearly defined. It was a blended finance project as well. So it's really at the cutting edge in between pure impact investing and almost philanthropy. And I'll come on to that in a second, because that's a growing area for us. And Ernst & Young are acting as an independent ESG and impact audit partner, because it's very important when measuring impact that it's measured by someone trustworthy and independent. And the bonds to finance this were actually sold to some of our BNP Paribas Wealth Management clients, as well as to other investors. What was interesting, our clients who were most interested in this, in participating in this, which was a high yield bond investment, were those who are our Indonesian clients, especially, who really understood what we were trying to do in this area. So it's very interesting to see how we were able to offer these bonds to our clients. And I think what's important here is there was enough scale in this investment that we were able to offer securitized assets to our clients. For our clients, and I think I was asked by Joe to talk about what our ask could be. It is important for private banking clients, for private banks to be able to help distribute impact investments to our clients. They have to be in a format that it's easier for our clients to invest. Securitized assets like bonds are, of course, very easy. Funds are another way to invest. But direct investments in a company are not as easy for banks to facilitate. This is important to recognize. I would say we also mentioned, in terms of funds, a couple of years ago, we launched KKR's Impact Fund, which is a private equity impact fund. We're looking to do more of these. And we also are very active on the philanthropy side. And as I mentioned, blended finance is a very interesting area for us. And we see a spectrum going from negative screening to positive screening to impact to philanthropy. And that area in between philanthropy and impact is clearly going to be a growing area of interest for many of us and our clients. And moving on to the next slide, it's very important for us as a leading bank in the region and globally to act as a thought leader and to promote sustainability and sustainable investments with our clients, through client events, through the mainstream media, and also in the wealth management industry media, which only really those working in the private banking industry would be aware of, because we want to attract bankers and professionals who are also passionate about sustainability. So we go for these industry awards to show other banks, other bankers, that this is something that's very important for us. You can see here a series of articles by our CEO in Asia linked to sustainable investing, some articles I had written or forums that we, or my chief investment officers, had participated in. This is very important. As I mentioned, there are some incorrect assumptions by most investors, and I do say most, perhaps not those who are attending this session, but those who are not yet tuned in to sustainable investing. They do immediately assume that they have to sacrifice returns or that they have to sacrifice something. It's very important to be able to show clients that in some type of investments, blended finance, yes, that may be the case, but not necessarily across all investments. And in fact, the integration of ESG criteria may in fact lead to better, more sustainable performance over the longer term. So there is an enormous amount of education to do here. And if I go on to the final slide, this is one tool called My Impact, which we've rolled out globally and in Asia over the past year. It's effectively a website. A client goes to a website and they fill out a range of questions. And as they fill out the questions, if they're very familiar with the SDGs, and all of you will recognize those beautifully colored SDG squares here on the slide. If the clients are familiar with the Sustainable Development Goals, they'll be able to navigate quite quickly. For those who are not, it also acts as a very easy way to educate them about the SDGs and for them to think through which SDGs, they're all valuable, but which might appeal most to their values. And as we identify which may appeal most to their values, it can help determine what type of sustainable investor or philanthropist they might like to be. And then our philanthropy team or our sustainable investment team can take it forward with the clients. So it's a way to really start that dialogue, because it's very important to start and continue that dialogue with our clients. As I mentioned, some of our clients are so sophisticated. They are more sophisticated than us. They've been doing impact investing for 20 years. They are cutting edge. And in fact, they help us improve. But the majority of our clients are still at the very early stage. And so we have to be able to meet and engage all of our clients and help all of them move along their journey, as we as ourselves as a bank also move along their journey. So that's really a quick overview of BNP Paribas globally as a bank, but also our wealth management business, especially in Asia, and what we're trying to do to help our clients move increasingly into the space. Thank you.